Hello, everyone. Welcome back to the FMB Podcast, where we talk about everything finance, money, and business. Today, I'm starting a new series called Investing 101. It's going to be a friendly guide for those that are starting their investing journey. And I'm going to make you understand different type of investment options that is available for you. So if you're just starting out or you are looking to get more intentional with your money, this is the right series that will help you to build more confidence to make smarter investment decisions. If you are ready to start your investing journey, then let's dive into the video, guys. Okay, welcome back, guys. First, this video is about telling you the 3 major investment options available for you. But before I dive into the type of investment available for you, what is investing itself? I have here with me that investing is the art of putting your money into financial assets. And when I mean financial assets, like investing your money in stocks, bonds, or even starting a new business with the aim that your business, your stocks, or your bond will increase in value over time. The concept of investing is built on the concept of time value of money. There is a popular adage that $1 today is better than $1 tomorrow, because if you are invested the $1 today, it might be $1, 1 cent tomorrow, right? So the concept of investing is that the value of your money must continue to increase in value over time. So if you are starting out your investment journey, and what should be your main focus is what are the different types of investments you can put your money to, and the value of your money will grow over time. And that is what we are going to be discussing today. There are different ways to invest, and they come with different level of risk and return. Remember, I've said in different episodes that I've uploaded that when you talk about investing, you should be thinking about risk and reward, because for every risk there must be a reward. All right, so you think about the risk, the reward, and your investment goal. So are you actually trying to build wealth? Are you actually to secure your future? Or what is the investment goal you have when you are starting out your investment journey? All right, so now I'm going to walk you through the 3 types of investment options that is available for you if you are starting out with your investment journey. The first here, I have cash and cash equivalents, and these are short-term, low-risk investments that are easily convertible into cash. So these are investments that you can keep your money, and if you need your money, you can basically get it instantly or within a short period of time. And several examples that I have here are savings accounts. If you keep your money in a savings account, you get an annual percentage rate specific to that savings account. For instance, it might be 4% APR. And what 4% APR is that you get 4% annual percentage rate on the amount of money you have in that savings account. So if it is 10% APR at the end of the year, you have 10,000 on your 100,000 investment. Okay, another example is fixed deposit. Savings accounts, you can easily access your cash anytime. Okay, but if it is fixed deposits, you might fix the money into your account maybe for the next 5 years, 10 years, 6 years, whatever year you want to fix the money in your account. But you should know that the money is also available for you at the end of the fixed term. And the last I have here, I have treasury bill and I have money market fund, and they are great for you to preserve your capital and handle emergencies. And remember, I said earlier that this a kind of investment option makes your money available for you almost instantly, because they are cash and cash equivalent, which means they are readily available for withdrawal. Okay, so one specific feature of cash and cash equivalents is that they have a very low risk, so they have a very low return, and they are basically affected by inflation rates. So you should know about the features of this kind of investment option. Next up, I have fixed income security, commonly known as bond. When you have a bond, what you are actually doing is that you are lending money to a government or to a company. Okay, and remember, when you are lending out money, you get interest in return. Okay, so instead of you spending your money today, you decided to give it out to a government to invest in government projects, or you invest with a company to finance their capital expenditure. Okay, and in return, you will get back your money with interest. Okay, so if you invest in fixed income, you get regular interest payments and your capital back at maturity. So this is like the basic feature of fixed income security. You get a regular cash flow and you get your capital back at maturity. So this kind of investment is ideal for steady income because you get steady cash flow either annually, biannually, or monthly. You get steady interest payments, and at the expiry, you get back your capital. And they are typically considered safe compared to stock. Now we're going to talk about that in the next options. Especially when you invest with government bond, it is considered to be more safer than equity. But remember that investments carry a particular level of risk, which means you might still have a bit of risk compared to cash and cash equivalent. Okay, and it is subjected to credit risk and interest rate risk. So credit risk is like, what if the borrower did not pay back your money? Credit risk. And interest rate risk is that if interest rate falls, then your interest payment will fall with the prevailing interest rate. Okay, so examples, we have government bonds, we have treasury bills, we have treasury notes, we have corporate bonds as well. So you just have to check which one is suitable for your investment goal. And lastly, that I'll be talking about is equity. So equity or stock, quite the same thing. And when you buy shares in a company, what you are actually doing is that you are owning a part of the company, which then makes sense. If the company makes some return in terms of profits, you also get a share in form of dividend at the end of the year. Okay, so your return comes from two sources. As if you are invested in equity, it comes from dividend payment and capital appreciation. So stock have historically offered higher return over long period of time. And if you check the charts, you will see that stock basically have more return compared to other types of investment. Okay, and that is why when you invest in equity, you are investing in a high risk investment option, and you are likely to get higher return compared to other types of investments. And for example, you can see some stocks that have done 300%, 200%, 100%, even in 6 months, in 3 months, in 1 month, depending on the industry and what is happening in the industry at the particular time. All right, so basically, you have 3 main options you can invest in: cash and cash equivalent. Think about fixed deposits. Think about savings account. We have fixed income security. Think about corporate bond. Think about government treasury bill. And lastly, we have equity. Think about buying stock and shares. All right, so there are other types of investment options besides these 3, like mutual funds. We have exchange traded funds. We have real estate. We have commodities. We even have cryptocurrencies. Okay, each comes with its own set of risk and reward, but the main point for you is to check what your investment goals is and invest in the right investment option available for you. So what I'm doing on this channel is to help you navigate to several investment options available for you. Then you can decide on your investment goal and pick the right one for you. Thank you for watching this video. If you learned something new, kindly like, share, and subscribe to this YouTube channel, guys. Thank you. Bye.